Hi traders, in this video we're going to be looking at the bullish flag chart pattern. So what this effectively does is gives you an entry into an uptrend. So what you want to do is you want to first find an obvious uptrend. So we have one here following on from the low up. This is a 1 hour pound dollar chart. Have an uptrend that went up 100 pips or so, and then we can see that price started to move sideways at this point here, which is where we want to mark the lows and the highs. So this is the flag. As you can see, it looks like the shape of a flag. Now the other part of the bullish flag pattern is the pole, so we'll just draw that here. Okay, so that's the pole from the start of the trend to where we saw the consolidation here, which is where we draw the flag. And then what we're looking for is price to break out in the same direction as the trend and enter on this breakout. Okay, so this played out exactly as you would expect here when price did indeed break through the top of the flag, and we're going to want to look to catch the move for at least the distance of the flagpole, so the initial part of the trend. So that's around 130 pips. Let's see how far. Okay, not quite 120, but still a good move to catch nonetheless. It's pretty straightforward to find this pattern on your charts. It can be used on any chart time frame. I find the higher chart time frames, such as this one, the 1 hour and above, give more reliable signals just because they contain more price data. It also means less time chart watching. If you prefer to trade on shorter time frames, you can look for this pattern, or you could just use this part of the uptrend here for finding long buy entries on lower chart time frames. That being said, if you trade in the bullish flag pattern the traditional way on this chart, you can enter on the breakout here with a stop loss the other side of the breakout plus a buffer. So let's have a look here. Maybe 20 pips around here somewhere would have given you a nice risk to reward ratio. You might have wanted to have locked in the trade at break even, as you've seen price consolidating around this area here. And then as price moved up, continued moving upwards, you could have always moved your entry here, and then as price continued up here, you could have moved your stop loss below this level of support here and effectively trailed it all the way up until price turned around. I mean, this is a really simple trading strategy to use. You don't necessarily need to take it as is. You can use additional confirmation with other indicators. For example, the ADX here. ADX is a indicator that shows you market trends and the strength in these market trends. Basically, with this indicator, you can see in the window here, you're looking for the green line to be above the red line for an uptrend, which is what we're looking for with the bullish flag pattern. And this line here, the ADX main line, when it's above 20, some people say less, some people say more. I think 20 is a sweet spot based on my experience. When the main line is above that, there's some momentum in the trend. So green line above red line, main line above 20. Let's just mark that off. So that's around there. This is the ADX telling us, okay, we're in an uptrend. There's momentum in the tank. Have some divergence as well, which is all good bullish signals. You can see higher lows. So everything is good for a nice setup for a bullish flag pattern trade there with sensible money management. Yeah, so whilst there are thousands of different ways you could have entered into this particular uptrend, this is just one of them. I've done lots of videos using different indicators and candlestick patterns for trend trading. It's good to know various different ways you can look for entry and exit signals, just so you can make sure you're confirming your trades with different forms of market analysis. Yeah, well, thank you for watching. I hope you found something useful in this video, and please like and subscribe for more.